Welcome back. Financial Issues, 866-392-98. We are going to get to the calls. I apologize. We had a full board, and we lost just about everybody except for the one we had in queue. So, but their phones are fine. They're back. We had a surge in the power or something. So you can call in 866-392-98. 866-392-98. The Dow's down 30 right now. Interesting week, too, as far as numbers, earnings reports come out. We have a huge part of the financial industry reporting today, this week. So that's where most of the earnings are coming from. We've got a couple other tech companies reporting, but we're going to have to watch the markets closely and watch these earnings report. Right now, is everybody expecting the financial sector to deliver good earnings for last quarter? So we'll see if they beat or come close to the expectation. We'll have to wait and watch. Let me go to Marion. Marion's calling us from Mississippi. Let's see here. Well, thought I could put Marion on here. Let's see here. Okay. Marion, hold on there. I am apologizing here. I thought that we had a technical difficulty with Devin, and I not being able to put the calls on, and I thought I'd be able to, and apparently I'm not able to do it. Let me just mess around with that, and then hang in there, Marion. We'll try to get to you. 866-392-98. 866-392-98. And I'm not going to be able to do this and talk at the same time, so I'll just keep talking because dead air wouldn't be good while I'm trying to figure out what I'm doing here. Anyway, we'll keep working on it. Just one of those days, Monday morning. So we'll keep plugging along. 866-392-98. If you want to queue your call up, hopefully we'll be able to get to it here shortly. Anyway, earnings reports coming out. This is a huge week. This starts, Alcoa kicked it off, as is usual. There is an awful lot. It's very interesting to hear one of the reports talk about financial engineering that has been going on. That's another way of saying, creative accounting. That's another way of saying just focusing on balance sheets as a result of the cheap money and the buyback of stocks and so on. So a lot of financing or financial engineering going on within those. But of the 25 companies that are reporting this week, 17 of them are in the financial sector. The financial sector, by the way, folks, the largest sector of the markets is the financial sector. It's one of the reasons, if you heard the first segment of the program, you heard Sandy Rios talking about 3,900 new rules and regulations. Over 2,000 of them were impacting the financial sector, which is going to impact the economy. There is nothing better. And I just talked about this last week when I said that it is nuts when we talk about more regulation, because I believe, I said it in 2008, after the collapse of Lehman Brothers, when everybody started to talk about why this was going on. I was saying, look, this has been going on for a long time. You have to go back to Jimmy Carter to trace it all. I believe that Bill Clinton was primarily responsible for it, the bank somewhat responsible, but the fact of the matter is it all boiled down to failed government policy, in my opinion, and a lack of regulatory oversight. There was no regulatory oversight. It wasn't an issue of regulations. It was an issue of regulatory oversight. So all the regulations in the world doesn't help anything if you don't have the oversight, if you don't have enough people, if you don't have people doing their jobs, whatever the situation is or whatever causes that lack of regulatory oversight. I don't want to say incompetence, but nevertheless, whatever you want to choose, the fact of the matter is that's what it was. And now we see more and more regulations coming into play. And it's I don't know, unless there is a massive behind the scenes hiring going on, then I don't know if, regulation's not going to help anything when you don't have the proper oversight. 866-300-9298. Now, again, I apologize because I'm unable to get these calls on the line, but we'll work on it at the break, I guess, and I'll have to make some changes here to try to get that to happen. Gotta love technical difficulties. Gotta love live radio. So much fun sometimes. Anyway, so we're going to watch the earnings reports are going to be big. You know, you notice that you haven't been hearing anybody talking about earnings. It's not as big a deal. I mean, right now the focus, and one of the reasons why we're seeing the markets down a little bit, is everybody's still trying to make sense of the job numbers, number one, on Friday. I don't know how that can be. That's not me saying that. That's not my assumption. That is, in fact, the headlines coming across the financial news wires, is the fact that everybody's trying to still make sense of what is going on with the job numbers. Well, what they're trying to make sense of is that as an indication of the broader economy. If that is an indication of the broader economy, then it leads one to speculate whether the Fed did the right thing in cutting the $10 billion a month out of their stimulus, so-called stimulus program, and whether it's going to lead to the stopping of that or maybe even more. Now, I wrote an article at the beginning of the year talking about what some of the things we could expect in 2014, and one of them was, I believe that we could expect actually more quantitative easing as opposed to less. Now, that flies in the face with what everybody else thinks. And yes, I could very easily be wrong on that, but it would stand to reason. Here's why. If the Fed is using the measurement of the economy and a thriving economy based on the same, the exact same indices, the same economic stability that they were looking for or didn't have that caused them to start this quantitative easing forever, then you would assume they're going to use the same things to stop it or to slow it down, right? Or to justify the continuation of it. Well, when we look at that, we've got to realize that when we look at those areas of concern for the Fed in order to start quantitative easing forever, they haven't changed that much. And the big question is, on Friday, is that an indication that they really haven't changed much at all? Now, there are many this weekend that said that number on Friday was totally irrelevant. Totally irrelevant, because the fact of the matter is it's all going to be adjusted right. Well, that may be true. And let's just say it is. If it is true, and it can be changed, then doesn't that say anything about the system, the competency of the system? Don't you think it's time to get over the 1960s phone surveys by the BLS? I always make a joke and say they probably still have dial-up phones over there at the BLS as they continue to make these surveys. They are left at the discretion of the surveyor. Not a good idea when we live in a 21st century that has real-time data on everything. Anyway, let's get to the phones. Let me go to Marion in Mississippi. Hey, Marion.
Hey, Dan.
Sorry about all that.
That's okay. I have a question here.
Okay.
My husband and I are both retired. I'm 65. He's 68. We have all of our money, for the bulk of it. We have some cash and a few things, but the bulk of it in IRA, traditional. Mm-hmm. What do we need to do? What do we need to do with that money?
Well, first off, Marion, and you're both retired, right?
That's correct.
So here's the thing, Marion. It's not so much. I'm going to break it up into two different areas here. One is, remember, in an IRA account, what's really, really important is the investments that are inside the IRA account. So you should be looking at a conservative preservation of principal mindset of those assets within your IRA account. That's number one. In other words, you shouldn't have a lot of exposure to the market. Should you have some? Yes. but you shouldn't have a lot of exposure to the markets. You should have some protection so that when things turn down, you will have some protection on the downside. Now, having said that, and that's what's important, having said that, I believe that everyone, when you reach a certain age, 65, 70, you need to have a way of a process, a systematic method that you are withdrawing money from your IRA account and moving it over to your savings account or another type of investment account. And you should be doing that every year on a regular basis. Now, at 70 and a half, you have no choice, at least, and the one of you, in a matter of 3 years, you're going to have to start doing that to take your minimum required distribution. But I'm talking about something over and above that even, because I would like to see everybody's goal to be at some point in time that they would be out of their IRA accounts. Now, yes, you have to pay tax on that. And unfortunately, people have been conditioned that I'm going to hoard my IRA money. I'm not going to spend it. I'm not going to use it, even though that's why I saved it. I'm not going to supplement my income with it, or maybe I don't need to, and that's wonderful, but that I'm going to keep it in that IRA account. And because I don't want to pay tax. And I don't like the idea that I got to remove money and then I got to pay tax on that money. Here's the thing. What you don't want, I believe, when we think about where we are headed as a government, where we are headed as far as our spending, where we are headed as far as our tax structure, we are probably in the lowest tax bracket that we're ever going to be in. And it is no secret that the vast majority of the wealth in America is tied up in IRA accounts, 401k accounts, and those kinds of things. At some point in time, the government could very easily levy some sort of fee, tax, or whatever on all of that money. I believe we need to start moving it out, not for that reason, though, but for the reason of it's far better for you to pay tax on that money at your current tax rate. You cannot avoid the tax. You can avoid the pain of the tax because you'll be in glory someday and won't care. So, yes, you can avoid that. But somebody's going to pay the tax, and it's going to be your heirs, and it's going to be significant because your heirs are going to have to pay your income tax on that money. Remember, you've never paid income tax on that money. IRS wants it. They're going to have to pay it. And far better that you pay it now rather than let it get into your estate and have your heirs pay it. So systematically start to withdraw it. So what I want you to do, Marion, is talk to your accountant. Find out what you don't want to do is push yourself in to a higher tax bracket by making a large withdrawals. So I want you to find out the difference between your income today and the next tax bracket that pushes you in the next tax bracket. So let's just say it's $30,000 before you get into the next tax bracket. So I would give yourself some leeway there and not go to 30, but maybe take 25 and start thinking about removing 25,000 and paying the tax on it.
Okay, and our options are, of course, savings account. It's in our bank. It's with our bank.
Okay,
but put it in savings accounts. And any other?
Well, are you going to use this money, Marion, to supplement your income at some point in time?
Well, I may have to. I don't have to right now.
Okay.
But I may have to one day.
Well, then, here's what I think. You need to have some exposure to the markets, not a lot. And I would suggest that you decide on maybe 10 to 20% of all that you have, and this is both IRAs, yours and your husband's, but the total amount and 10 to 20% of that. I would move 10 to 20% of it into just a mutual fund like a Timothy plan, get a conservative growth fund, and just forget about it. Just don't even worry about it, because that will do well as it, will help you keep pace with inflation. So you got to have some. The rest of it, I would think about preservation of principal and have it in the bank in a money market account, very short-term CDs, until such time as the bond market turns around. And I think we're probably a year away from that happening. So I think that would be your options. Marion, you're welcome to hold on. I got to run if you have a follow-up question. We're right up against this hard break. You're listening to Financial Issues. I'm Dan Celia, 866-300-9298. We'll be right back.